Hi, everyone. Good ECB day. We'll see what ECB has to say. Dollar working lower. Talked about this all week. Was looking for a turn. Got it yesterday. Hi, Hugo Brock. We'll see how far they push it. At this point, I'm not looking for new lows. I know a lot of people are saying this was 4 and we could go to new lows here. Alexandra, how are you? I'll be looking at fibs. Just like I said, I'd be looking for fibs in euro. Talked about yesterday, the euro, that this grinding little wedge here. It was hard for me to want to be short euro here, especially since EG was exploding. There's a new high in EG. EG tells me not to fade the dollar. Okay, well, take your time. You're in the right place to begin to learn. Welcome to the Hotel California, Josh. You could check out, but you could never leave. You're hello, hello, man, Mohan. Raja, how are you? All right, so we also, with the weaker dollar, had a real nice. Hi, Rami. Had a real nice recovery in S&Ps here with a 2 drive. So let's see if we could hold this low with all the bad press about Woodward's book. Still think that there's a chance for a failing rally could get up towards this level, maybe 34 or 35. I'm thinking, and I'm just guessing ahead, that maybe this was the first part of the correction, or Ellioticians would call it A, and then we get a B up here, and then we finish up the correction. Be best for the administration if we finish up this correction going into October and start heading up. Hello, Roshan. Nice to meet you. Japanese yen still, in this range. Not much to talk about. Canada's holding up pretty good after a look like a false breakout, a few different directions, but Canada, compared to having a weak dollar, is holding up okay. I have a lot of I don't knows. Today, the commodity currencies are weaker, although I still think we could get one more rally back to 61.8 here in the Aussie. That's back to about 73.28. So right now, the position things are in, I'm going to react to the ECB. And if we get a bout of dollar strength, I'd most likely be looking to fade it. Started to get some recovery in the oil market yesterday. It's given a little bit of it back here, but still looks like we could, push again. I'll be interested in shorts up around the $40 level, all the way up to 41.5. So couldn't do it in the hole. I don't know if we'll get all the way back to the breakdown at 42.40, but I think 40 is a possibility. So we'll be looking at it there. I want to welcome all our viewers from investing.com. So this is for you. Take a look at some of the FANG stocks on that recovery yesterday. Apple was one of the weakest. Say 136, a $24 break. 12 would take it back to 124. I think we'll have a failing rally here in Apple. I don't think we're going to blow right to new highs. Here's Microsoft. It had a better day than Apple, but even at the old highs on many time frames, Microsoft was not confirming. So could be a short up here around the 220 level. Again, I'm not looking for new highs right away. I'm figuring this is just the first part of it. Then we get the second part, and then the third. Here's your XLF. This is very dependent upon yields. It really didn't participate in this big rally. Here's Google. Really took it on the chin. Google's one of the few that confirmed. on multiple time frames. Big break, $200 break. Let's see what it could do on a $100 recovery back to 1620, 1640. You know, to me, it looks like a lot of these have topped. The only argument against that is when you look at most of these on the daily have confirmed. Microsoft, one of the few that haven't. See that? Even on this blow off move, we had glaring massive divergence in Microsoft. Apple, I believe, did confirm, yeah, over 80. So you think that that might have a chance. Here's Amazon, you know, the superstar. Amazon looks like, you know, it might have a chance to recover at least to 3,400 or so. So right now, even your strength, which people are rotating out of growth here, looking for other places, you know, they're not going to come out of the stock market. So we'll see where they rotate to, but a lot of these growth names look broken to me. And I think that we're going to have, I'm thinking 1920, DJ, but 1875, let me take a look. So basically, a lot of these high flyers that led the way all the way up, I'm looking for failing rallies there. Same with the Russell, maybe back to 155. This is the IWM ETF. And what's interesting is during this sell-off, you've gotten really no flight to quality on any of those days. Here's TLT, so doesn't look that great to me considering we had some risk off. Rallies are pretty weak. Think that we could head lower on TLT, maybe for a third drive down here. We'll see. You would think that this would take the yen down if that happens, but the yen is even disconnecting from yields lately. So we have a good guest today, someone I've never interviewed before. So stick around for Brian. And right now I'm going to bring Blake in so he could get his bias chart up for all of you guys so you know the critical areas of multiple instruments for the day. Want to remind everyone that we're going to have a major event at the end of September. We'll put the link up there. Probably one of the best gathering of speakers in one event that I've seen. And, you know, a lot of people are doing this stuff now. And we really put together, Joe and Steve and from some or a few of my contacts are going to be speaking at this event. We invite you all to come and learn, enjoy, and participate. Good morning, Blake Morrow. How are you, buddy?
Hey, good morning, Dale. How are you?
Fine, Dale. How are you?
You hear me?
So, Blake,
You're very, I can barely hear you, Blake. Your volume is way too low. Good morning.
I can't hear him at all.
I heard him just a second ago saying, "Can you hear me?" But really low voice.
Okay. What's the green and the blue, Josh? They're moving averages, 50 and 200. So he might be having some issues with his new microphone.
No worries.
Anything we could talk about what your expectations are for the ECB, what's going on there still?
Well, expectations. We're not really expecting something drastic. What people had been looking for potentially was a mention for the FX rate, because we all know that 120 in euro dollar is a place where they start to get a little bit nervous in terms of how overvalued the euro might be. And there was nothing on the statement. So maybe on the Q&A there's going to be something about it, but really the sentiment now is that they're not immediately worried about it. So that's why the euro is just trickling up a little bit, going I think Blake is back.
Hey, can you hear me?
We can hear some background noise, not very well.
Test. Testing, test.
You sound like you're at the bottom of a barrel.
Yeah, but you sound indeed like you're at the bottom of the barrel.
Really?
Yeah,
Even now?
yeah.
Yes.
Something
Kind of
tells me
muffled.
something tells me that you've selected another microphone, perhaps, or something is very wrong with the settings.
Test.
Yeah, there you go.
There you go.
There you go.
My
Now you
goodness.
switch to the
Okay, I know. It's. I have so many things plugged into USB ports. It's like which one's which type of thing. Sorry.
Trust
All right,
me, I
guys.
know exactly what you're talking about. I have a USB extension card in my computer for that reason. It's a
Hey,
nightmare.
I'm sorry my low tech has rubbed off on you guys.
It's just man.
Blake,
Little-
you know how low or no tech I am. So what's a
Yeah.
USB port?
Right. So hey, thanks for for filling in a little bit there, Stelios and Steve and Dale. Sorry, I was running a little bit late, guys, or I wasn't running late. I was just sitting here trying to fiddle with my speakers. Anyway, hey, as Dale was talking about, if you guys haven't signed up for the Traders Summit event, here it is. So I'll put it in the chat box. It is really pretty cool. What was it? How long ago was that?
April.
Was it April?
End of April, Blake.
End of
yes.
April. We had our first Traders Summit event, and it was great. I mean, it was awesome, and I wasn't sure how we would
Top
exceed.
it.
Yeah, exceed expectations this time with the current speaker lineup, but man, it's really good. So it's free to you guys. So make sure you guys sign up and also reserve your spot as well, because we only have so many spots. You can still, even if you don't have a spot, you can listen to it after the fact, but I would try to get your live spot now.
Blake, one
Yeah.
more thing. People that are going to register for it will have access to the recordings much earlier than the public.
Oh, yeah. There you go. So yeah, make sure you register. Can you guys hear me?
Yes, just fine, mate.
Is it fine? Okay, because
It is absolutely fine.
And
Okay.
two of the days
wanna make
it's 3-day event, right, guys?
Yes.
Okay, so 2 of the days are on the weekend. So if you're not working on Saturday and Sunday are the last 2 days. So there's not a lot of college football on. So maybe you could pick up a few ideas that could help you save money to go to the Super Bowl next year.
North
huh?
Americans are the only ones watching college football, if there is some. So
There is some.
That is true.
the rest.
Oh
of
yeah, I
the-
forgot. Yeah.
yeah. You remember you have a global audience
Oh,
here.
thank God.
So you just nailed about 10% of our viewership. Way to
Okay.
go.
All right. Well, I
Yeah.
think that people have jobs in Europe and all over the world, and they still have weekends that they have off, right?
And by the way, football requires a ball and a foot. You have something like a hand melon there.
Oh, yeah, I know.
All right, guys. Well, hey, I'm going to get to analysis because we have to get moving before the ECB press conference starts in about 17 minutes. So speaking of the ECB, they kept rates unchanged. Actually, they left the statement pretty much the same.
And we're back in your channel, Blake, huh?
So
After
yeah,
coming out of it.
one of the reasons why the euro popped yesterday, if you guys didn't catch it, is because there's a Bloomberg headline that came out that said ECB members are going to be they're less dovish on the economy, basically. So anybody who was short yesterday is like, oh crap, so they had to cover, and that's what took us back above 118. Currently we're trading at 118.50. That's a 38% retracement. We got some horizontal resistance right here at 118.65. I would say the upper end of today's rally could take us to 119.10 because that's going to be the 618. I think we'd be very fortunate for bulls if we got up there today, but I'm going to write that down for resistance. I'm going to keep us in range in the euro. I mean, you know what? I should probably just put us back into bullish because this was a little false breakdown. And this is bottom line. As long as we stay above 117.50, I think we have to keep that bullish designation. Okay. All right, let's talk about the cable. So the cable is trading heavy today. It was you could see the pound started sliding actually a little over an hour ago. With some headlines that have been coming out, and obviously Brexit is a big issue currently. And I'm going to tell you this right now: I'm not going to be on the long side of the pound unless there's a game changing headline that garners my attention. Right now, I think the pound is trading really heavy. We've come out of this, ascending wedge. We had that false breakout up here, as you guys know. Next level support really for the cable is going to be here at 128. So yesterday we had a nice little hammer off of the 50, just as the 50 DMA, but we're back below it today. So, are we going to get down to the 128 level again? I don't know if we're going to be able to do that, but I do think that, dips down to 129 should offer support today, or 128.85. And I will keep this in range. It's actually bearish. But the reason why I say it's bearish is because we came out of this wedge, false breakout, lower highs up here, so I think we could actually keep that on bearish while we're below.
I know you don't have it on the bias chart, but as a product of that, Euro pound is breaking higher actually.
Yeah, the Euro pound definitely has broken the downtrend line here. We rallied off the 618 retracement of this move. For those of you guys that don't follow the Forex analytics and you missed all this analysis. So yeah, we had the 618 last week. And I knew we were going to bounce from there. I was very surprised to see us clear this downtrend line. So ever since then, now you can look at the Euro pound, and hell, I mean, we could realistically be moving up to 92, 90, 93 and a half pence. So, the cable looks very vulnerable at this point. So let's go back to the pound. The resistance here, I think we just have to mark up. This is basically 130, 130.30, and right over here is 130.50. So I would say that while we're below 130.50, the risk remains lower for now. All right, let's talk about the Aussie. We bounced right off of that previous channel support. As you guys knew that yesterday, 71.90, I think, is what we wrote down. We should have resistance now at 73, 73.10, roughly 73.15. And I'm going to put this in range. 72 cents is going to be support right here. Any dips back down here, this is kind of where we're stuck. Right through here. Okay. Kiwi, very similar situation actually to the Aussie. I think it's 67 to 66 cents right now. And matter of fact, let me delete that really quick and do this. So 50% retracement, 618 comes right up here. Previous support, which would be 67.20. So we'll write that down just in case we make it up there. 67.20, and then 66 cents should be support. And as you can see, we're in this ascending channel too. Just like the Aussie is very similar ascending channel. So just be respectful of it. You know what I mean? Don't get aggressive to the short side while you're in these channels, right? Okay, let's talk about the Canadian. So the Canadian slumped yesterday. One of the reasons why it pushed lower is because crude oil actually rallied pretty sharply off of this support, the 36 level. If you guys didn't see it, it was horizontal support. After we broke the 200-day moving average, we stopped at horizontal support. We bounced back to previous resistance or previous support is acting as current resistance on crude. So while we're below 38.50, the risk for crude lower is high, in my opinion. So the dollar Canadian, basically, we've come out of this channel, we've come back and retested it. This is, and let me show you a couple things. This is from this move here. Okay, you can see it. Okay, there's a 618 right here at 31.30. From here, okay, from the low to the high, 50% retracement comes in at 131.30. So basically, being the broken trend line that it is, while we're above 131.30, we should not be short. Now, I'm going to keep it range for now, just because the dollar is trading a little heavier. But, having a bullish bias here, now that we're outside of this trend line, makes more sense to me. What I'd like to see, and let me see if I can draw this for you guys. Annotate. What I'm thinking here is you got this, move that looks like this, and we're probably going to do something like this over the next few weeks. Next week or two, just build out, a base here, between, 131 and 133, and then start, basically, looking to build a base for a bigger reversal. Okay. So we'll see it. A lot of that has to. One of the things that has to happen in order for that to happen is you have to see, equity markets stop hitting new highs, and it looks like we might have put in a near-term top in equities, but that does not necessarily mean that that's going to be the case. I could have said that 100 times over the last, several years. So, but if equities, stall out here, especially with the elections coming up, then the US dollar Canadian may base around these levels. So anyway, I'm going to put for today resistance. Let's see here. Let's go. So move back up to the 618, or maybe even some previous support here would be 132.10. So I'd say any move back up towards 132.10 should find resistance. Swissy. So big rejection in the Swissy. And matter of fact, if you guys are looking for some support, we're probably near it. There's a 618 here. Previous trend line here comes in around 90.50. I would say 90.50 is going to be probably decent support here. And you can see that resistance was just a big rejection at 92. 92 is big. Obviously, it's previous support here. Previous support here is acting resistance currently. So, we hit 92 like a ton of bricks and then just reversed yesterday. So, obviously 92 is big, period. End of story. Okay. Dollar yen. This is my chart of the day yesterday. If you follow me on Twitter or you follow our blog, we are developing a nice tight range here. So now resistance is 106.50, support is 105.60. So whoops. I got to finish this up. 105.60, 106.60. And in a range, looking for a breakout. Dollar index out of the channel, paused at the previous channel resistance, right? Basically, look at it like that, and we're just sitting there. Resistance is going to be at 94. You guys know why it's 94, right? All these lows here. Okay, we have to get all the way above 94 for us to turn bullish. So and probably I don't know. I don't think I'm it's like I want to keep it on range, but I don't want to I don't know if I want to really put it on bearish yet again. Support intraday would probably be around here about 92.60. So and that's loose support. It's not really great support. Let's go to the dollar max. So the dollar max has been trading very heavy. We rejected this 21.90. You guys saw it from Forex Analytics a couple of days ago, right when I hit there. You can see all those arrows popped up and was sent out. And, we rejected and came down hard. Now we are at new trend lows, which is interesting because there's the 618 retracement of the pre-pandemic move. Okay. That comes in at 21.27. So I'm going to write that down as support. Okay. And I'm going to have to put this in bearish, but I'm also going to write that in the event we get back above 21.50, we could squeeze here. So, it'll end up being a false breakdown. So just 21.50, let's pay attention to it. Okay. We should hold it, but just in case. US dollar, Norwegian krona, support here, resistance up there, pretty easy now. And we've talked about, let me move this really quick. Okay. 920. I think yesterday we went to 918. So that is significant. And support, probably say the overnight low at 897 or 898. Support. I'm gonna keep us in range right now because we've like a lot of these dollar pairs, it looks like we're trying to build a base. So just keep that in mind. Gold strong. It's at its highs of the day right now. I don't think much has changed here, except we are coming right back into the underside of this trend line. Top of this trend line comes in right currently here. So 1960 and then 1900. And we are keeping it in bullish while we're above 1900. And the S&P, real quick. I know I just have a minute here. Remember, this is the breakout point at 3,300. We bounced off it really aggressively yesterday. So we have a nice little flag developing, although the flag's a little bit long in the tooth. Once it exceeds 50% of the flag pole, then it's not so much a flag. So, but we could be developing like an inverted head and shoulder pattern with this being a shoulder. So support 33.50, resistance 34.25. Okay. And there you go. So your bias chart is finished. And I think we have some news coming out right now, right, guys? We should have weekly unemployment claims.
Jobless claims. Yes, sir.
Is that it?
That's it for now. Yeah. Plus the ECB presser starting.
Right. I'm gonna.
We have PPI as well. US PPI.
Oh, okay. Here we go. And remember, the data flash is part of Forex Analytics. So, whoops. Here you go. We match it up to Bloomberg. It's like literally almost like sometimes it's quicker than Bloomberg, believe it or not, which is wild. Which is right here, and I don't have it set up correctly.
There we go.
Oh, there, all the news.
Populated 884.
PPI 0.1 better. Jobless
Hmm.
claims slightly worse. It's non-event.
Dollar is not moving at all. Now,
Continuous jobless claims, almost 500,000 more.
True. Yeah, what's 500,000 between friends?
Yeah, indeed.
right. So the press conference is going to be starting right now, guys. And again, here's your bias chart. And if you guys have not signed up for the Traders Summit, make sure you do so. Reserve your spot today. And I'm going to pass it over to you guys. Have a good luck today, guys.
Thank you, Blake.
Good luck, Blake.
For people that don't happen to be watching this on Zoom, where they can see the link, the URL is tradersummit.net. Okay, just making sure.
Yes, good point, actually.
Yeah, and keep in mind that part of the event is our nice debate panel. I'm really looking forward to it with Peter Schiff, Pompliano, Yusko Lakal. There's a good chance that we're going to have Abigail Doolittle from Bloomberg doing the moderating if she gets approval. Otherwise, we have a very, very good alternative. So I think it's going to be very interesting. Of course, it's one of the interviews and or presentations are going to be great as well. I'm personally, I personally find it very hard to distinguish between our guests because they're all, really great at what they do. I'll try to be there for all of them, Stelio.
Yes, somebody's asking how to join. I'm going to put the link on the chat box right now. Hold on.
And it's free.
It is free, yes. So and hold on. All panelists and attendees. Here you go. There's the link. And it's free and seats are limited. So, it's, join now and reserve your spot. So what have we got today? Well, the pound has been the main
Our friend
mover.
Josh that is asking, can you suggest me a book to read? 20,000 Leagues Under the Sea, mate.
You know what, actually, that's a good question. And I've said this on this webinar before. When I started my first trading job, before I joined, I got hired and I had another 3 months in business school, whatever it was. And my boss at the time said, look, you're going to read these 2 books. One is a book on bonds and options and futures. Forget about that. The second one was Market Wizards by Jack Schwager, who, by the way, is going to be speaking at the Traders Summit. And that book
Not only that, Stelio, he's also going to be he's going to be talking about his new book.
Yes, that's correct. So it's good to read the book about technical stuff, but really these kinds of books like Jack Schwager's books, they're fantastic for the psychological aspect and, how things really work. And I can't recommend it enough. It really helped me to start. So
indeed, yeah. For those that don't know, it's like a collection of interviews from some of the biggest traders out there, and there's a sequel as well. And I'm not sure if his newest book that he's going to be releasing, is also going to be some kind of a sequel, but definitely one to read. Yes,
absolutely.
It'll be out in October.
Perfect.
So we're getting
Dale's going to be interviewing Jack, so I'm pretty sure we're going to find out all about his new book on the interview. But it's an interview you need to watch mainly because being the person that has interviewed so many people that have succeeded in doing this, he's the best person to tell you what he's seen to be like the common characteristics of the people that actually succeed.
Yes. There's only one guy that has interviewed more people than Schwager.
You.
Yeah.
By the way, guys, we're getting some headlines, interesting ones from the ECB. There is no need to overreact to euro gains. Now that's unexpected. I didn't expect that.
Stelio, if you remember, I said multiple times that I wouldn't expect the ECB to try to verbally intervene.
Yes, but it's one thing to say that and another thing to just say nothing. I expected them worst case.
True.
Yeah. So also Lagarde is saying the data suggesting a strong rebound and domestic demand has recovered, but there is significant uncertainty. So I think all in all, a little bit more hawkish than expected, and the euro is rallying. Okay, we're gonna be in touch with the headlines coming up. The other thing, a main mover today is the pound, and we haven't had anything firm yet. But there are two meetings which are finishing shortly. One is a joint committee. The UK I think it's expected to finish in about 30 minutes, and then there's another round of UK EU negotiations, which is finishing in about 1 hour and 30 minutes. So we have to be on our toes for that. Clearly somebody knows something because the pound is dropping like a rock.
Yeah, EG, Euro pound still is almost.
Don't forget,
at
Stelio, that
92.
EG is the fourth most liquid
Yes.
currency pair. So, one to blame is definitely the cross rate for putting some extra pressure, on the pound itself. But to be honest, seeing the technical picture here in the euro pound, I think you're going to get your wish fulfilled to get 93 cents. I'm actually thinking that you you might get more than that.
Yes.
More than 93 cents.
Yeah, I'm not gonna pull the trigger 92, that's for sure, but the way it's going. But my target's between 92 and 93. Depending on price action, I'm gonna start slowly accumulating shorts. A friend Skip is asking, theoretical question: if the S&P was to drop like in March, would gold and silver likely drop by the same amount, or
No.
could it be the other way? I think not. I think
Yeah.
gold and silver are going to trade better. Because we've seen, the main driver for me, and I've said this for a while, the main driver for precious metals, given that supply and demand is roughly constant, I mean, it doesn't change that much. It's not like oil. I think the main driver for gold and silver is money supply. And as long as money supply keeps increasing, we're going higher. End of story.
That's not the only thing, Stelio.
Real rates as well, obviously.
It's also recent experience. Let's see, for example, what happened in gold and the GDX during that drop that you mentioned. They dumped the baby along with the bathwater. They brought the GDX to, like, what was it, 4-year lows. They brought the GDX to 4-year lows, and if you exclude the short period there, to multi-year lows. And guess what? Whoever bought it made a killing. So trust me,
it's unavoidable. I think that when people start selling assets and you have margin calls, you have all these things, you will sell anything you can. Unfortunately, you're going to sell the crown jewels along with other stuff. And gold and silver trade well, so they have a liquid market as well. So they're going to get sold, but I think they're going to get sold a lot less. It's my opinion.
Also from recent experience, people are going to be thinking more than twice before they get rid of those positions to meet their margin call, Stelio. Right?
Yeah.
And not only that, we know that after this tectonic shift that we had in monetary policy, and you've started seeing a lot more people that are appreciated in the industry, more and more of them buying gold stocks, buying gold, buying silver. There is a lot of pent-up demand at lower levels. So even if the initial reaction in such a case is going to be to sell off these assets, the GDX, the GDXJ, the silver miners, silver, gold, trust me, there's going to be a lot of buying interest long before we get such a type of a sell-off. So yes, we might see an initial move lower, and we might see a depreciation in gold stocks, gold, silver stocks, but I think it's not going to be anywhere near what we got in March. I think a lot of people learned their lesson, from the previous time, and they're not going to be doing the same mistake again. They would rather be getting rid of junk like Teslas and Slacks and all these stocks that are clearly speculative, because rainbows and unicorns will have to come through in on Earth before they can actually make sense in what they're pricing in, before they actually start getting rid of real assets like gold, silver, and stocks of gold and silver, which
yes.
Keep in mind that, as we've said multiple times in the past, gold and silver stocks in essence are like a high beta play in gold and silver, because keep in mind all these companies have a lot of gold and silver under the ground, which some of it they won't extract because there is a high cost of extraction when the price is lower, but the higher the price climbs, the more quantity of that underground gold and silver starts making sense to extract, because now the cost to sell it has exceeded the cost of extracting it, plus the profit you want to make. So the higher the gold and silver prices move, exponentially the higher the value of these companies.
Yep. We're getting some more comments from Lagarde. They've changed the GDP forecast slightly. So 2020, they've raised to -8% from -8.7, and they've dropped 2021 from 5.2% to 5%, and 2022 from 3.3 to 3.2. But really, 2 years ahead, 0.1%. Who cares? It's absolutely nothing.
So they think there's going to be 5% growth.
Yeah, I'll take the under.
Year. How can I bet? How can I take the under? Give me a market, please. I mean,
yeah. Two other little things to mention. We had CPI readings from Norway and Sweden. Norway, we do cover at Forex Analytics. Sweden, we don't, but it's always nice to see the SEK. Sweden came in 0.1 worse than expected at 0.8% year on year. Norway is up at 1.7% year on year. So there, it's been, it had a severe drop during March and April, but now it's going back to basically pre-COVID levels. So that's encouraging for the krona.
Speaking of which, Stelio, SEK still going very strongly. Recent rebound, for the time being confined in the boundaries of this consolidation. RSI has now been reset to neutral. I would be very, very careful being the USD along the USD SEK here. I think the risk reward is definitely in favor for more weakness. USD NOK, more or less the same deal here, getting rejected from this area of resistance. I'm still holding my NOK short positions, by the way, NOK long positions. I mean, short Euro NOK and USD NOK.
They're from a lot higher, right? Yeah.
Oh yeah, I'm 15% in the money, something like that, 20% in the money. Something like I'm not even looking at them. As I said, since the very beginning, I intend to hold to them for a very long period of time.
I don't blame you. Yeah. So. I don't think there's anything else to say. I'm going to keep an eye on the headlines, and we can have a look at some charts maybe.
Okay, perfect. So let's have a look at it. Since Lagarde started speaking, German Bund 10-year yields went up from -0.477 to -4.34. I noticed despite Brexit, Lagarde speaks in English, not in German or in French. Natural gas platinum. Okay, speaking of which, it's not a bad idea to have a look at the Bunds. So, quite an interesting area here for the Bund. I meant to mention that yesterday, actually, but I completely forgot. The reason I meant to mention it yesterday is, as you see, we were getting closer, and now we're actually testing this ascending channel trend line support. We remain in the middle of this larger channel. You can see that has, in essence, kept price since confined price here since last summer, actually. So it's been more than a year now. In the bigger picture, that can prove to be like a larger consolidation before we move higher. But within that consolidation, I mean, we can still move a lot lower and not break the consolidation. So I'd have to say that long-term direction, higher, medium term, I think we should be neutral. I mean, we remain range bound in this zone. Short term, what's this channel trend line support? I think this is going to define what's going to happen. We either rebound from here, or if we break through it, I think there is more downside to come in the days ahead. Oppositely from the Bund, which still behaves like a market more or less, the US Treasuries refuse to behave like a market. Makes sense since, in this space, very soon enough, I think by the end of next year, there's going to be only one player left in this market. There is already a dominant player, which is the Fed. I think within a year from now, there's only going to be one entity doing all the buying, and that's going to be the Fed inevitably. So, I've lost any interest in the treasuries. I'm still looking at them, of course, but I've lost any interest in even attempting to trade it. And this is one of the main reasons why, there is absolutely no point in considering trading the USD yen. Not that it can't move from other factors, but having one of the biggest correlations like pegged, which are the treasuries, you can see what's happening here. I mean, one consolidation formation within another, within a larger one. Bottom line, USD yen has become an abomination. I used to have it constantly up on my charts. I usually have like 12 charts, 2 screens of 6 charts each, on 2 of my 4 screens. USD yen has stopped being one of them a long time ago, although it was always one of them. Now I have a look at it like 3 times per day, just to make sure that nothing is moving, which nothing is moving with, a few exceptions. You might have like a day, a big move during a day, and then again it goes in hypnosis. And I find no reason why somebody would actually want to put real money in trading this until it becomes a market again. Who knows when that's going to happen. Here's the best secret in trading. Thank you. Our pleasure, Skip. Thank you for your kind words. Now, the questions we had, let's cover all these instruments. So here's gold. Testing this trend line resistance. Be a little bit careful here. I still believe that the price action that we've recently had in gold in no way points to a bearish continuation. I mean, we might see more weakness, but that's going to be in the context of a corrective move. But I see that there is a real danger here for the bears, that there is going to be no more downside, and we're simply going to break out from here and just push to all-time highs.
Check out the RSI at the highs.
Yeah, it was
90.
92 or 91, whatever.
So,
yeah.
Okay, so what that implication, right?
Yeah, I mean, not the type of RSI you're expecting to see in a bearish market, right?
Yeah, no, yeah. I mean, that's a confirmed high and extreme momentum, and basically the market's been working it off, just moving sideways.
Yeah, exactly, and it's been oscillating around 50. Didn't even attempt to go towards 40. So I'm looking at this chart. I know the fundamentals. I'm looking at this chart and I'm like, why would you really want to be short this? I mean, it's like a train wreck about to happen, if you're short here. And this market can really start squeezing people again. I've said it before and I'm going to say it again. You think that you've seen like, the biggest part of this bull market. I think you might have a surprise coming.
Alexander is saying 1907 is a buy of gold. It was a buy of gold.
Yeah,
if it gets back down to 1907 again, I don't think you want to buy it.
Yeah, I agree, because then we go to what we've said before, that very rarely the market gives too many opportunities for somebody to do the obvious thing, right?
Yeah.
But so I agree with you. If we go back to towards 1900, there's a good chance that we're going to break lower. That is not going to change my thesis. I mean, I'm going to still clearly view this as a correction, as we've said many times. In advance, making hypotheses about how a correction is going to unfold is a very, very tough job to do. But I can tell you as a fact that once we see gold breakthrough, like what's this level, like 1980, I think the chances that we're headed lower again, it's a very low probability. I think if we break through 1980, gold is probably going to end up accelerating the upside. And as you see, silver is more or less an equivalent situation. It seems to have decided to work out the overbought conditions in time instead of in price. I think above this triangle, we can see silver trading up to $32 in a matter of a couple of days, 2-3 days. So, be very careful. Platinum, somebody else was asking about platinum. I also see a formation here in platinum that seems corrective to me, and we're testing this trend line resistance exactly as we're doing in gold. Here's palladium. Palladium seems to be breaking out of long-term consolidation as well. Here is copper. Copper actually hasn't stopped appreciating higher since it found a low in March, still within the confines of this ascending channel. Here's nickel, more or less, looks a little bit like copper. So bottom line, anything that's tangible, anything that has intrinsic value, as you see, is just showing you what the direction for the dollar is, right? Because all of these assets are dollar denominated, and this gives you a good idea of what's happening with the real value of dollars and the vast majority of the fiat currencies, give or take. Greetings from India. Please also open bank Nifty chart. Okay. Yeah, I'm going to have a look at it. What will you say? What will you say about metals, and especially gold and silver? Were up in last month, July and mid-August, and all of a sudden fall to 6,000 gold. What do you mean? Nothing moves in a straight line. I have nothing to say about pullbacks. Pullbacks are part of bull markets, as rebounds are parts of bear markets. There is nothing to say that there. I mean, it's a natural, it's the natural waves that any market creates as it moves in any direction. I mean, nothing can move in a straight line one way or the other unless it's in a bubble, and that can only happen for a very limited amount of time. So, anything else will create bounces or pullbacks, depends on if we're talking about a bullish or bearish market. So, that's why people should be paying attention to which levels they're buying or selling, because you might be very bullish gold, for example, but you shouldn't be buying gold when the RSI is at 90. You should wait for a pullback to buy at a better price, for example, or the opposite in a bear market, right? Let me go through some of the rest of the questions. We covered all the metals. Crude oil and natural gas. So crude oil, I think this market clearly broke down. There's no question about it. I'm viewing the price action of the last 2 days as a consolidation. I think this market might still have more to run to the downside. Ideally, I would want to see the 29 level area being tested. I've said that in the past, and nothing has changed here. And natural gas clearly pulling back after a strong breakout higher. But as I've said before, I think that as long as we trade above 205, there's a very good chance that natural gas is going to find a low above that level and continue to the upside. So I think the closer we get to 205, the better the risk reward to attempt being long once again. I was long. That was actually my trade of the year so far. And I'm totally open to the possibility of buying it again. Not yet. I would say 225 is probably an area of interest. So, let's get closer to that level, and I'll perhaps start looking more actively to be involved with it once again, but not yet. Steve, have a look at EuroCAD. Yeah, actually, something. People don't frequently look pairs like EuroCAD, but I actually wanted to talk about EuroCAD, and you can see why. That's why, because I actually think that EuroCAD is, if you're looking to have exposure in something that's, uncorrelated to the dollar, I think EuroCAD looks very attractive here. The formation on the way down had clearly corrective characteristics. I like the area that we found support on. And I like the fact that we seem to be breaking out from this descending wedge. I think it's extremely likely that we're going to be revisiting like 159.50. So we're talking about another 300 and something pips to the upside. So the risk reward is still extremely favorable against the lows at 154.30, whatever. So we're talking about like a 200 pip stop. So you're risking 200 pips to make, what is it, 310, 320. I think it's, I think it's rather attractive. So yeah, I do like EuroCAD. I don't know if you're looking at it, for a short or a long, but I have to tell you that, I like it as a long position, especially given the fact that the market probably didn't get from the ECB the dovish tone that it wanted or expected today. So especially, given that, and especially if we get crude oil moving towards $29, as I mentioned previously, I think the mix is going to be quite favorable for a move towards 159.50. My pleasure, Dimitri. Oil and Natty been my best trades this year so far. Your Euro call looking good. Yeah, thank you, mate. Okay, let me go back. Euro. Oh, yeah, I haven't had a look at that in quite some time. You can see, last time we had a look at it, it was back then, and this was still unfolding. So we were discussing about two possibilities, like a possible head and shoulders formation there, or a possible triangle. A lot has happened since the formation ended up being something like this, right? So something like this. I have to say that not a beautiful looking type of formation here. I would be looking to trade something different, I have to tell you. But, roughly speaking, against like 343, I think the path of least resistance is higher. Okay. But as I said, definitely better opportunities out there for you to be looking to trade. Just, my 50 cents. Dale, do we have an interview today, by the way? Oh, you did say that we have an interview. I just remembered. Okay, so a question about EG. I think we mentioned it before, but we might as well have a better look at it.
Yes, we have Brian at Quant Fiction.
Okay, so EG broken through this corrective channel. I can easily see 93 being the next area of resistance if we cross through this previous high, which I think we will. 93 after that, and above that 95 cents. So these are upside targets, and I think against 90.50, the path of least resistance is definitely higher for the euro pound. Now, I promised our friend that I'm going to have a look at the bank Nifty, but in that context, we can also have a look at the Nifty. So here's the Nifty broken through this channel. Be careful because it might accelerate lower here. And here's the bank Nifty, clearly a lot weaker, got rejected from the 200 DMA. I've advised multiple times in the past, don't be long anything that has to do with financial and banks. There is really, fundamentally speaking, long-term perspective, there is really nothing viable with their business models. I'm not saying they're going to go bankrupt, but I'm not seeing how they can actually really prosper in the future. So, you want to be an investor in some, assets or, some specific industry or sector, let that not be the banks, if you're asking me. S&P still in rebound territory. Better watch the Nasdaq back testing this broken channel. I think this is going to be an interesting area. If we get rejected again from backtesting this channel, I think that's going to be quite a bearish development, and it's going to open the door for at least one more leg lower of weakness. In that case, I would be looking towards like 10,250 or so. And if we see another leg lower, it's going to be likely that tech's leading the way. So that's why I'm paying closer attention to the Nasdaq in the short term. So with all that, just a reminder, register. It's free to traderssummit.net. Don't lose this amazing event. And Dale, if your guest is in the
Yes.
house,
Okay. Thank you, Steve.
my pleasure.
Okay, Brian, I'm going to get you set up here. What happened?
Do you need any help?
I don't see him showing up on panelist.
Did you promote him?
I don't know. I
Okay,
clicked it to
Tell me the name.
Brian. He had Brian at Quant Fiction. Or QT, Brian.
I don't see him.
Yeah, I don't know what happened. Let me see if he sent me. It was my bad. So, Brian, are you still here?
I don't see him for sure.
I was here. Yeah.
Any
I don't
chance
know
you
what-
misclicked to remove him instead of promoting him?
Yeah, there is a chance of that.
Okay.
Okay. Okay. Well, I guess we'll have to reschedule, Steve.
Okay, Dale.
All right.
So, okay.
I
So we'll
had
see.
Peter Goldstein wanted to come in because of the markets. He'll be here tomorrow. Peter's been pretty accurate, so we'll have Peter Goldstein tomorrow.
That's going to be
Peter's been
great.
yeah.
That's going to be a
so
great interview.
I apologize, everyone. I may have misclicked. So
It happens.
and I'll get back to Brian and we'll have him back. So remember, I hope everyone was able to take advantage of the weaker dollar. I think we were talking about this possibility from Tuesday, and here it is. Take at least partial profits. And also the Euro's off number for Friday is like 119.04. So a close above that's going to be a 2-week reversal. And dollar's way above it. So everyone have a great day. See you in members chat. And don't just count your pips, count your blessings. And we'll see everyone to wrap it up tomorrow. You're very welcome,
Dale.
everyone. All right. Thank you, Steve. See ya.
Bye-bye.
You're ending.